All right, folks, I am joined today by Santiago Roel Santos. This is not a one-time thing. I am thrilled to announce that Santiago is joining as the new co-host of Empire. We're going to do something special. So we're going to actually add an episode every single week to Empire. Thursdays, per usual, you'll get the episode with a guest, Santiago. We're lucky enough to have him joining us for those episodes as well. We've got some amazing guests coming up. Kyle Samani from Multicoin, Bill Tai, pretty famous venture investor. The founders of Avalanche are coming on, Gabby from YGG, and some other really, really big names that we can't share yet. And then on Friday mornings, around probably 8 a.m. or 9 a.m. Eastern, we're going to have a weekly roundup. And the weekly roundup, the kind of breakdown of these shows is just going to be like narrative watch. What are the big narratives we're seeing every single day in the industry? Top stories. What are the big news stories? And like how do we actually take them and go one layer deeper than what kind of the topical news announcements will show you? And then the last thing is just breaking down some of the top tweets that you might see on Twitter every day. And Santiago has a really good behind the scenes look at what's really going on. And so just kind of explaining maybe what's a couple layers deeper on the tweets as well. So Santiago, I will call you my captivating co-host today. Thrilled to have you. Welcome to the show, my friend.
Hello, GM. It's great to be here, Jason.
GM. We need some good like GM merch here. That's what's coming next. So yeah. Santiago, I think it would be helpful before jumping in. Can you just give a little background on yourself and like your background in crypto and where you come from and all that kind of good stuff?
Without boring our users, I got involved in crypto in 2012. I was at JP Morgan at the time, and really, I'd studied game theory. And so for me, it was just fascinating. Like this idea that you can have a system that doesn't rely on trust, and then you can do so many things around that. And I've been like obsessed as an investor of removing friction. Like when in our daily interactions, I think you and I can, and everyone really can sympathize. Like they're just things that like you're left wondering, there ought to be a better way of doing X or Y. And invariably, I always keep coming back to crypto because I think that it is inherently such a powerful technology that will allow us to do things just faster, better, and cheaper. And I think I've always come back to that thought. And to me, it's been super captivating. And sometimes, look, I've made a lot of mistakes as an investor. It's hard not to get super excited. And in 2017, narratives tend to sometimes talk about narratives in this show a lot. Narratives sometimes tend to get ahead of fundamentals. And so, as an investor, it's important to come back to what is actually going on in the space. And I hope that in this podcast, we can marry those two, right? I mean, we talk a lot about narratives, but we'll also talk about what's actually going on behind the scenes to give people an understanding of what is that gap between narratives and actual fundamentals and traction. And hopefully we can keep each other accountable here, because there is a lot of really, I don't think that in my time in crypto, and most recently I was at Parify, I was investing just in DeFi. Now I'm just, an angel investor, institutional angel investor, I guess. But I'd like to get really involved with projects. And so hopefully from that vantage point, we can keep some good, insights around what's actually going on in the industry and what are the narratives that are kind of evolving. Amazing.
So let's jump in. Sure. One of the big narratives that folks have been talking about for the last several months is just the layer one wars. And I know you don't really see them as a war, and it's not like I know you really don't see them as like these ETH killers per se. Last week there was a lot of talk around like Suzu and Kane, and we don't have to get into that too much. But one thing that's starting to be pretty apparent is that it's tough to kill the king, right? And with these smart contract platforms, ETH remains the king. Right now, you're seeing ETH BTC starting to make potentially some new highs, definitely new highs in this cycle. It's now the highest it's been in around 3.5 years. So how do you view this? How do you view like these L1 wars right now? How do you view ETH BTC starting to make new highs? What's your take on this?
Yeah, let's start with the most important, I think, which is the ETH BTC ratio. It's something that a lot of market participants watch, and most people probably are in tune with that. And it is making very interesting. Look, I'm not a chartist, but it is making an interesting kind of breakout, if you will. And it goes back to this idea, can Ethereum as a network flip in Bitcoin? And I think, obviously this puts that discussion front and center. So it's super interesting to watch. And I think, look, momentum is important in this space. I get it. But I think there's, in my mind, like Ethereum's already flipped Bitcoin because it has so much more activity going on top of it. But, that's for a separate conversation. But it is a very interesting kind of ratio that a lot of market participants are following. The other L1s, I think a lot of the discussion is around, can competing smart contract platforms supplant Ethereum? And in that discussion you have Solana, you have Polkadot, and you have Cosmos and Avalanche, and I think it's as you said, it's really, I think it lacks imagination, because ultimately all of these different blockchains are going to be catering to different use cases, and so I would almost argue that the success of Solana is probably net marginally beneficial to Ethereum, and vice versa.
So tell me more about that. So you think the use case, so there's a couple different kind of visions for the future of these L1s. One is that it's a winner take all, right? Either ETH wins or Solana wins or Avalanche wins. Another kind of common theory is that they all own a different use case, right? Maybe ETH is the warehousing mechanism for like really large contracts. Maybe DeFi and finance gets built on top of Solana because of Serum and things like that. Maybe something else, such as, Luna takes something, Avalanche takes something else. What narrative makes the most sense to you right now?
I mean, I sort of ascribe to the second one, which is, I think there will be application-specific blockchains. Like Flow, for instance, is focusing on NFTs. Solana, I think, is seeing a lot of interesting activity on the social front and gaming side of things. Also, DeFi, just given the muscle of Alameda and FTX and Serum. But I sort of think that it's, and when I say it's net positive, meaning So there's an interesting tweet by Jesse Walden, which is an investor at Variant this week, that said, look, probably Solana's going to onboard more users over the next 6 to 12 months in Ethereum. And prove me wrong. And I've known Jesse. I think Jesse and Variant as a whole have been like mostly investing in Ethereum. But I think like most funds and investors in this space, it's become harder and harder to overlook the activity that's going on in Solana. And okay, assuming that is the case, you're probably going to see a lot of users come to Solana, but are they going to stop there? Because they might, to your point, want to use a much more robust and certain applications of DeFi that only exist in Ethereum. And so there, I think that's where ultimately this is net positive for both Ethereum and Solana. I don't think it's a winner-take-all market. I think there's going to be a lot of bridges and connectivity between these blockchains. But, who knows? I mean, I think I could appreciate the competing views that it is just winner-take-all, but...
Yeah. I mean, there's two frameworks that you always have to view these assets within. It's not just in traditional capital markets and traditional tech. It's basically just users and customers, right? So if you're analyzing how well a company is doing, you'll look at how many customers they have or how many users they have. In this, you obviously have to look at the investors, because everything is liquid. So you have to look at the users and the investors. And so when I think about the L1s, it's like, the user experience is so much better right now on something like Solana. It's just so much better than Ethereum is. But also on the investor side, investors are pretty quick to say to believe that they think that they missed the train on Bitcoin and ETH, which I completely disagree with. I just want to put that out there. But a lot of the kind of institutional crowd that we're speaking with, they're pushing farther out on the risk spectrum into things like Avalanche, into things like Solana. We talked to a pension fund the other day that was thinking about buying Solana, which is just completely nutty to me. But it's because they think they missed the ETH trade, right?
I mean, I was in the Breakpoint conference in Lisbon, and it was a panel on what happens if they're all-time highs, and the question was like, what do people do? And I don't think it's an interesting question. I think let's just put it out there. Bitcoin is still in price discovery mode, and everything else falls. So if you think you've missed the boat on Bitcoin, then I find that hard to believe, because Bitcoin as a whole is, if you believe that it's going to actually be a non-sovereign store of value, then there's plenty of upside from there. And look, none of this financial advice, but and Ethereum as a whole, as a smart contract platform, is sort of like it is attempting to be the value layer of the internet. And so when you think about how big the internet is and how much value gets transacted on top of the internet, it's far, far greater than gold. If you put that into perspective, then I think you invariably come to the conclusion that it is still very, very early. And I think a testament to that is how quickly these narratives evolve. I mean, 6 months ago or a year ago, when I was getting started at Verify, DeFi wasn't even a thing. Now people moved on from DeFi. DeFi is like, you're a dinosaur if you still believe DeFi is going to be a thing, right? You move on to NFTs and you move on to gaming, and then, God knows what's next, right? But I think, you almost wonder at what part of the adoption curve you're at. And I think invariably it is super, super early
Yeah.
across the board.
Yeah, I mean, fun story for the listeners is Santiago approached us in February of 2020, about maybe 20 months ago, saying we want to host or I want to run a DeFi podcast. And Mike and I basically looked at Santiago and said, "Yeah, that's cute, my friend, but nobody gives a crap about DeFi. The market is way too small, and nobody wants to listen to a podcast about DeFi." So here we are. I know. I'm glad it only took 20 months, and you just being wildly right and us being wildly wrong. But
Yeah.
So let's I think this is a good tie-in to the counter argument to Solana is that it's too centralized. And that's what like a lot of the ETH folks say. I would just do want to point out that Bitcoin folks always said that ETH was too centralized. ETH folks say that Solana is too centralized. Solana folks are going to say that the next thing is too centralized. But actually Scott Hickel had a really good tweet on this. So one thing I want to do with you, like I mentioned in the beginning, is go into some of these tweets that are said on Twitter and just kind of break them down. I'm going to see if I can share my screen here. So Scott Hickel is one of Blau's co-founders at Join Royal, which is doing like music NFTs. And he said, had this kind of narrative violation tweet, which is the point is not to, what he said is the point is not to decentralize everything, right? The point is not to decentralize everything. Layer ones need to be decentralized to provide an uncensorable global shared database. Apps built on top of chains can and often should be centralized. So what he's saying is the layer one, Avalanche, Ethereum, Solana, whatever else it might be, needs to be decentralized, but the apps on top don't actually have to be decentralized. And this is kind of counter to what a lot of people think, especially with the, everyone being so focused on DAOs right now. What are your thoughts on Scott's tweet here?
I don't know. I mean, I think he's probably coming from a standpoint, which is users at the end of the day might not really appreciate decentralization. And I think your financial institution, for instance, if you're issuing a mortgage on chain, well, JP Morgan or Goldman or Wells Fargo is really going to care about the chain being sufficiently decentralized and secure as a settlement. Now, you as a user might not necessarily care about that. You might just trust JP Morgan, and that's okay. I think it goes back to this idea, Jason, you were talking about, a sort of user aggregation. Like the end user might not even care or know that they're interacting with blockchains. It's just so that the things that they just care about at the end of the day, the bottom line, which is it's faster, it's better, it's cheaper. And you ultimately make some sort of trade-off there, which is, there's always been a double standard in this space, right? We talk about decentralization, but most people still use centralized exchanges and still use custodial solutions, right? And so it is, I think, a tall order to assume that every user is going to be their own bank and manage their own keys. I think it depends on the use case, right? And I think for a lot of times you are comfortable making that trade-off on that continuum of trust.
Do you think users will even know what layer one they're using?
No, not really. At mainstream, not at all. People not. When you swipe your credit card on Amazon, do you care what's going on in the back end? Do you even know what's going on in the back end?
I don't know. Probably Stripe, and Stripe is using honestly not just one quote unquote layer one cloud provider like an AWS. They're probably using a combination of AWS, Google Cloud, and something else, right? And
do
Azure.
They care if you're running? Yeah, exactly. AWS or Azure or Google Cloud or something? No, not really. Yeah. I think that's where we'll go.
Yeah. Next tweet I want to look at is actually about DAOs. For a while, Mike and I had been saying that DAOs represent the next step forward in the labor movement. And this is Lee Jin, incredibly smart over at Variant Fund, like you mentioned. I'm just going to point this out and pull it up so that users can actually just go through and look at this tweet. But instead of walking through it, I just want to kind of get your take right now on specific to DAOs. Like right now, DAOs feel a little overhyped to me, I will admit. It feels like anyone with a DAO is going to be able to raise a bunch of venture money, and that this bull market might end with like a blow off top in DAOs or something like that. And the way that I'm kind of viewing DAOs is honestly like they're a regulatory arbitrage for a lot of the existing companies. You look at companies like Shapeshift, who are basically just turning into DAOs, and all that is just a regulatory arbitrage. And I know a lot of the labs behind a lot of the main DeFi protocols are thinking about transitioning into becoming a DAO. So what's the framework and kind of narrative that you're looking at when it comes to DAOs right now?
I think two observations. One, I think at the end of the day, blockchains are coordination mechanisms. DAOs, I think, are really powerful coordination mechanisms of both financial and human capital, and the ability to share. So a lot of DAOs are being created around a shared objective, mission, value. It could even be a defined time frame. And I think that's quite powerful. I mean, I do ascribe to this view that DAOs probably are the new corporation in this sort of more fluid world that transcends local jurisdictions, but instead relies on smart contracts and the programmability and reliability of a blockchain, right? That is tamper resistant. And I think that gives you a lot of certainties. If you're investing in an SPV today, well, you're kind of relying on the manager and AngelList and all this stuff to distribute stuff and, to make sure that they're doing the accounting right and all this stuff. That totally goes away in a world of DAOs because everything is on chain. Everything is just perfectly transparent, auditable in real time. And you don't even rely on these people. You just say, look, if there's a liquidity event, you distribute to these people in this manner. But also it doesn't stop there, right? You could also have, which is a more ambitious, that's probably the more simplistic DAO. The more ambitious one is like trying to like create an organization and like empower people in this chaotic, like open, like distributed world. That I think is much, much more challenging. And I think a lot of DAOs today don't realize how difficult it is to coordinate human capital in a decentralized organization. That is probably,
yeah.
I don't think we'll kind of solve that yet. Or at least I haven't seen anyone do that well. And I'm a member of a number of DAOs, and it's super difficult.
Yeah. I think the main challenges, Lee Jin pointed these out pretty nicely. Three main challenges. One is scaling, one is governance, and one is balancing the interests of the capital providers with the active contributors. Mm-hmm. I do think there's a good argument, though, that like DAOs do get a lot bigger than some of the largest companies, right? You could see a world where there's a DAO that's much larger than an Uber or a Lyft or a Facebook or something like that, just because of how strongly they align the DAO members with the network's growth, right? Mm-hmm. It's just a 95% alignment instead of something like maybe a Lyft or an Uber where there's like a 2% alignment with the users and the company's success. So
yeah. I mean, I think you look at gaming guilds and a few other DAOs that have been cropping up. I mean, I think ultimately just the most powerful element I've thought of open source networks is that they're open to anyone to come in. No one really is checking your credentials or none of this nonsense. It's really, if you're an active contributor and people value that, your contributions, you are part of the DAO and you will be compensated. And I think that's, in the long run, social networks and traditional companies are going to struggle to retain talent for this reason, because why wouldn't you go to DAO?
Right.
Versus like being beholden to some sort of weird hierarchy and nonsense and unequitable distribution of value creation in some of these normal corporations. Right.
So, I mean, look at what YGG is, the Yield Guild DAO is doing. It's basically becoming just an on-ramp that brings more players into play to earn gaming. And it's lobbying game developers for better policies. It represents gamers actually in lawsuits. It can provide health benefits, protections, PTO, healthcare, things that are completely infeasible if gamers are operating on their own. And Lee Jin, again, just pointing back to that thread, had some great points on this. So,
yeah. But just to round this out discussion, it is, there is this sort of idea that a DAO for everything and people want to acquire things and it's just a party bid. I just caution people when they're looking at that, like the Constitution DAO that we talked about the other time, it was just unclear what you were actually owning. So it's just sort of important for people to actually realize like what constitutes ownership and governance of these DAOs. Like it's fine to like, I guess, band together and try to do something in a shared value, but some of these roles, responsibilities are very unclear.
I completely agree. I think one thing I'd like to actually, there's one other tweet, one other concept I want to talk to you about, which is just the
narrative. By the way, people are already starting picking up that everything in Twitter, everything in crypto happens on Twitter, because we will always go to tweets, because that's where for anyone that's uninitiated in crypto, I always tell them, if you're not on Twitter, you're like missing out on like 90% of the alpha. So
we actually mandatory make all new employees get on Twitter. And a lot of people have this preconceived notion of like Twitter in 2012, which is, it's something that like you go and post like your comment on like the recent sports game. and
Yeah.
not understanding that there's a lot of good stuff that happens on Twitter. So it's pretty funny.
Yeah.
One thing that happened is Ross Ulbricht issued NFTs this week. Did you see this?
Yes, we did. Maybe
Were
through
you-
a DAO, we might be looking to be the highest bidder.
Possibly, maybe.
Possibly, maybe.
Possibly. So I want to hear your take on these NFTs. I want to hear it sounds like you probably will end up bidding on this. I want to hear why you're going to do it, if you're comfortable sharing that, and if you can share it. One thing that just pissed me off to my core, though, is all of the Bitcoin maxis piling onto the tweet saying that, basically disowning Ross because he was issuing these NFTs, because it's not this, Bitcoin maxi to its core. Ross Ulbricht has done more for the Bitcoin network than 10,000 of these people have, who all joined in, 2018, 2019, 2020, right? And the people who did the most for this network were the people in the early days. Hal Finney, right? Mm-hmm. People like Ross Ulbricht. And I don't know. It's just I know I shouldn't get pissed off by it, but I can't help but think that these Bitcoin maxis are complete lunatics piling on and kind of trying to disown Ross Ulbricht. So
yeah, I don't disagree here. I mean, I think it's obviously I think that it's an unfair kind of type of punishment that he's received, and he's ultimately, I think the bright side of all this is, whether you believe in Ross or not, I think what is super powerful as a mega trend is NFTs being used as mechanisms to raise money for NGOs and organizations that are advocating for things. I mean, just for perspective, PleasrDAO, which is a DAO that I'm a part of, a lot of the NFTs that we bought have the artists or the foundations that we bought them from have decided to, give it to charity or finance their own operations. And so we bought the Snowden NFT, and I think we gave the freedom of the press 1 or 2 or multiple years of operating runway. And they came to us and said it was, and to me, it's just really, look, there's a lot of money that goes to charity, but unfortunately somehow there are certain people that don't get these, or grants and all this stuff, people in academia. And so I think it's super powerful. I mean, just NFTs as mechanisms to, to finance or to support causes that you believe in. So, but yeah, I think that for a while I felt that there's a certain contingency of these communities, especially in Bitcoin, that are just too extremist and just have taken a path that I don't see what I don't agree with.
Yeah. So you guys are thinking about bidding on the Ross Ulbricht NFTs?
Yes.
Wow. That's the scoop of the day, Santiago. I know I'd get one scoop out of you.
Yeah, I know. We've got plenty of scoops, but yes.
Yeah, there you go. Cool. Any idea how much it'll cost?
10 to 20 million.
Can you tell me more about this? Is there a DAO? So I don't know how much, if you can share which DAO you're in and what it is, but is everyone basically contributing the exact same amount of capital? Does everyone in the DAO, is there basically a capital call and everyone has to contribute the same amount? How does this actually work?
Yeah, it's taking a life of its own. So PleasrDAO started as, we were bidding on Uni V3 video by this great artist called People Pleaser. And we're all the initial members were all kind of very into DeFi. And we just wanted a bid to get it. And so instead of outbidding each other, we banded together and we collectively bought it. And that really is transformed into what it is now. We've bought multiple assets. We've fractionalized one, which is the Doge meme. And that really kind of helped bootstrap our treasury. And so, yeah, not every member contributes the same amount. We are very focused on onboarding a lot of artists that obviously in that instance, it's not, the focus there is not everyone contributes the same amount. It's really increasing the diversity and the collective kind of brain power of this group. And the mission really is that I think emblematic of a lot of the DAOs that are cropping up is we want to preserve and own pieces that capture the essence of Web3 and advocate for certain things like privacy and security and independence and freedom of the press. And I think that's, from my vantage point, been super rewarding to be able to empower people like the Tor Foundation or freedom of the press around that. So in this case, I think we only like to kind of bid on things that, I guess we bought the Wu-Tang album from Martin Scarelli. So we kind of restored something that is pretty emblematic, I think. So that's a PleasrDAO 101.
So one more question on PleasrDAO and we'll move on. So let's say the thing's going to cost 20 million bucks. Do you have that in the treasury? Is there a capital call? Like, how do you make sure that like let's say you have 5 million to contribute and someone else only has like 3 ETH? Like, how do you make sure, like, what's the benefit for you basically?
Right. Yeah. So we all, I mean, I guess it's represented by these governance tokens that are owned by members, but we've sort of raised capital at different instances. We're not raising at the moment, but historically we have, and we have a balance sheet at the moment by which we will draw on to buy something like this. But in the past, it's been pretty chaotic. Sometimes we were bidding on like the Snowden piece, and we had to just raise money like in 5 minutes, and so it was like very chaotic, as every DAO really is chaotic.
Yep. Last tweet of the week, which I think was my favorite one, is Ryan Watkins over at Masari tweeted out, "We need a bear market," and it was basically just a picture of the Omicron token getting bid up to, I think it was up 230% in the day, 210 bucks, which I think is just basically, honestly reminds me of like the people, the Constitution DAO token just getting bid up by people who are like, all right, you know,
GM. Well, wait a minute.
GM,
GM and Shiba and Doge. And look, Jason, you and I are both reading or have read the book Wanting recently, and it talks about mimetic desire. And I think that in large part, it just sort of puts, it is so, sometimes it takes something so ludicrous like that. And you say like, how is this possible that some of this stuff is worth billions of dollars? Like there's no value, right? It's not like gold that I can touch and feel it. And like, this is kind of the criticisms that you hear from old people. I just say, wait a minute. Everything in this world is a social construct, even fiat money, Bitcoin, Ethereum, every other asset. So why all of a sudden do I give value to this pen? And why does this pen worth 10 times more than another pen? Well, because, you know, there's just some sort of like, I want it. And so other people might see that and like, and might like that. And so I just think that it's, this space really kind of flexes your thinking around, like, why do we give value to certain things? And is Omicron like, the challenge I'll make is don't laugh at it, just observe it, because it's like human psychology. It's like super fascinating, and like something good might come out of that. Like Doge, at one point, I mean, they have like huge war chest, and what's to stop Doge from actually moving a proof of stake and like building a network? Like it has a ton of community, and isn't all that's underpinning these blockchains? Like there's a coordination of social energy and a narrative that ultimately makes people want to expend energy to earn Bitcoin. Like, think about that. Back in the day, I remember in 2012, this is crazy. And so, like, I don't know, like, I find these experiments, obviously, like, it feels toppy. It feels like, you know, this wouldn't happen in a bear market. But also, it's important to appreciate the memes and the power of that, and how everything ultimately is like turtles all the way down.
Don't bet against the meme, baby. Let's talk about the capital coming into the space. We'll start getting into the big news stories this week. Just this week alone, Borderless Capital launched a $500 million Algorand focused fund.
That's like the city guy that no one knows about. And he just like is running this fund. Just by
I think no. There's another one. I think it's the city one. The city guy is this former city banker who launched a $1.5 billion crypto venture fund. And the venture fund is not focused on, you know, these like infrastructure plays. It's not investing in the Firebloxes and the Coppers and the BlockFis of the world. It's investing in metaverse tokens, NFTs, yield staking, play to earn games. So you've got this city guy goes out and raises $1.5 billion, and he's investing in metaverse NFTs, right? Yeah. What do we think about this?
It's amazing to see, I think, in many ways. I don't know. I've never actually interacted with him, but yeah, a lot of times we've seen a lot of these large funds come into the space and invest in like ancillary services, right? Like exchanges and things like Fireblocks and Anchorage and stuff like that don't touch tokens. But I think it's, I don't know, I'm not going to read too much into this, but perhaps people, I think the biggest holdup from institutions has been the regulatory side of things. But maybe this is a positive sign in that direction, which is if you're comfortable holding tokens, we've come a long way, right? In 2017, tokens were taboo. Like it's like, you know, we don't,
right.
It's blockchain, not tokens and crypto. And so now I think we've well past that kind of narrative and people are more and more comfortable with tokens.
Yeah. Here's why I know that this firm is going to work is because their first hire or one of their first hires is this Goldman analyst by the name of Sam Purifoy. and Sam had previously quit his job at Goldman to pursue a career in play to earn gaming. The reason I know this is going to work is because Sam gets the memes. Sam's moniker, his play to earn moniker was Das Capitalist, which is obviously a nod to Karl Marx, Das Kapital, where he talked about it was like, that's where he really expounded his theory of like the capitalist system, its dynamism and its, tendencies towards self-destruction. And so they're hiring guys who understand that the meme is the message, baby.
Yeah. Yeah.
So
it's also crazy to just observe that like some of these funds, like they're really young, right? And I've always thought that it's super powerful that a lot of the best investors that I met in the space are very, very young, or really old, but not like it's sort of like this gap in the middle of like 40, 50, 60, whatever you want to call these boomers. But really old people like I've met like really old like oil miners, oil like barons from Texas that immediately get Bitcoin. And then like you have really young people that obviously are attracted to the space. It's hard to ignore. And then this gap in the middle of 40s, 50s that just don't get it and continue to be really skeptical. It's just fascinating.
Right. Some other big fun news this week. A lot of the news this week was kind of just about the money and more institutional capital coming in. I thought it was Thomas Bravo. Tama Bravo, yeah. Tama Bravo is building a crypto and fintech growth investment practice. Why is this such a big deal?
Yeah, look, I mean, I think them and Insight Venture Partners, Lightspeed, I mean, there's a number of others. I mean, Parify, which is where I was before, like they're raising a growth fund as well. And so I think it's, two things, right? I mean, Coinbase really, I think, woke up a lot of these funds to say, wow, you missed Coinbase, you missed a massive value creation in the fintech space. Because Coinbase is and could have been a fintech investment for a lot of these funds. And so I think, I was doing growth equity before kind of jumping full time into crypto, and it is a very competitive landscape. You're investing in software, and these multiples it's a very competitive space. I think the average return of like a lot of these venture and growth funds is compressed dramatically, where top tier funds are now like a 2.1x, I think is the latest data from the MVCA. I mean, you look at like the asymmetry that you can have in crypto, and I think a lot of these funds are realizing, hey, wait a second. Whereas maybe before, you can actually deploy meaningful sums of capital into this rounds. Like you talk about, Gemini just raised, Kraken raised, FTX is raised. And so these are massive, massive rounds, relatively speaking, to support, pretty large capital deployments. And so I think more and more people are realizing there's a meaningful opportunity here. Because sometimes the issue had been, I think a lot of people had been interested in the space, but struggled to deploy capital outside of tokens. But now I think they're seeing, there's an entire ancillary services as Fireblocks, Anchorage, Coinbase, Binance, FTX. So ultimately, not just exchanges, but service providers around the space. And so I think that's what they're seeing probably. And I think that's why their LPs are also excited about this stuff. So you call it the picks and shovels of crypto, which I say picks and shovels on like air quotes because I just find it like, what I understand.
Yeah. If you ever want to convince like a 65-year-old LP to invest in your fund, just tell them that you invest in the picks and shovels of the industry.
That's what it is. Yeah. This is a gold rush, and just picks and shovels.
Yeah. We're not looking to actually dig the gold. We're looking to build the next Wells Fargo and Levi's jeans. Cool. So Tama Bravo, one last note on that. I just want to tell people the scope of Tama Bravo. We were looking at, everyone in the space got really excited because Andreessen just raised a $2.5 billion fund. Tama Bravo, the scale that they operate at, they just completed a $23 billion fund raise. I think it's across 3 different funds, but it's $23 billion, right? That's 10x larger than Andreessen. So the scale at which these really large private equity funds that now kind of own pretty much all chunks of American capitalism and American businesses, like the KKRs of the world and the Apollos of the world, it's really tough to comprehend how actually large these things are. So in my opinion, quite a big deal they're getting into crypto. The next news story that I think is pretty interesting is 1inch. 1inch closed a $175 million Series B. The thing that I find interesting is not how much money they raised, but that a lot of their focus with this fundraise is to serve the institutional client. This reminds me a lot of what like Compound is doing with the Compound Treasury product. It reminds me of what Aave is doing with Aave Arc. And it just reminds me of this like narrative that permissioned DeFi will ultimately be bigger than permissionless DeFi, whether or not we like it. What's your take on this story? And what's your take on specifically 1inch really trying to target this institutional crowd?
Yeah, I've known the 1inch guys for a long, I guess since they started. Like it was a hackathon in New York, and they've come such a long way as this sort of very easy aggregator to trade, right? A token and find the best execution. It's like order routing, and it's pretty incredible what they've done. And yeah, I think quote unquote, the next 1 trillion of assets entering DeFi will come from institutions rather than retail users, and 1inch would like to facilitate entry for them. And so I think like a lot, as you said, I think a lot of founders in the spaces in DeFi are realizing, look, institutions need some handholding, and need some sort of sandbox kind of environment, different kind of customized environment to interact in DeFi. And so, I think if you're a friend, I think what they've seen is a lot of funds, a lot of market makers want to interact in DeFi, but it's difficult to know where to start. And perhaps 1inch wants to be that primary landing spot. And it has been for some, to be fair, but as more and more traditional financial firms want to enter the space, I think they want to be well positioned to capture that new flows.
In 2017, the market basically peaked because a lot of the ICO treasuries had to sell their ETH, right? They started hiring. They said, oh shit, we need to pay our employees. We need to pay for costs and software and all this kind of stuff. Let me sell off some of my ETH. And that is what started to cause the, 80-90% downturn in the markets. Right now, the capital coming into the space is not really going into ICOs. It's what I would call, that was like impermanent capital. This is more like permanent capital. It's traditional venture money. Let me just read off. There's some of these fundraisers. Outside of the 1inch fundraise, there's been $4 billion that have flowed into crypto companies in November alone. Celsius, 750 million. Forte, 725 million. MoonPay, 555 million. Gemini, 400 million. Consensus, 200 million. Mythical Games, 150 million. Sandbox, 93 million, right? Royal, 55 million. Starkware, 50 million. Grid is doing like a $500 million debt financing round from blockchain.com. The list goes on and on. This feels like more permanent capital to me than 4 years ago, which was all the ICO funding. Does this smooth out a cycle? Does this extend the bull market? What's your take on all this venture money coming in and like how it applies to actually where this cycle goes?
Yeah, I mean, it's I guess I'm not as it's hard to time these markets, right? But because a lot of goes into that. But I do think that look, is this a super cycle? I'm not sure, but I do think that it's quite positive that finally, I think traditional investors are waking up to the value that can be captured and created in crypto. I mean, this is not an economy or an asset class on the fringes. It is actually now a very well established asset class. It's what now, 3 trillion plus? What's the latest? 2.8 trillion, give or take. Yeah. So, I mean, that's not chump change. And so I think ultimately, yeah, it's super positive because it's not capital that's being recycled. Ethereum swapping to another, it's fresh capital from also people that I think have longer time frames to play out this technology bet, because that's ultimately what it is, right? Before it was just okay, this is a macro hedge or whatever. People are speculating. I think that inherently the fund that wants to hedge macro through Bitcoin, if they believe that, is probably more fickle and short-term in nature versus a tech venture investor or growth investor that has a super long time frame or longer time frame, if you know what I mean. And so I think ultimately, this asset class has gone from being, this is an interesting experiment, but it's largely just Bitcoin centric and then some sort of alts, to, wait a minute, there's just so many different dimensions here. And I've noticed it as an investor, the number, and I think you and I talked about this, which is it feels like more and more talent is jumping into the space and there's just more opportunities. And so your batting average goes up and you're left wondering, am I doing something wrong? Am I just, your batting average shouldn't go up. But I think it's just a function of, you have Bitcoin, you have Ethereum, you have all these different L1s that are supporting different use cases. And so now the range of things that you can invest in is expanded quite dramatically. And I think, to your point, it is capital that I think is more patient and permanent to the space. And so it's super net positive, I think. What does that kind of put you in a territory like software as a service that's been on this super mega trend over the last 20 years after the dot-com crash? Possibly. I mean, that's my thesis. But like everything, there are pockets of the crypto universe that I think are pretty heated.
What's your thesis? What's that? What's that last part that you're mentioning?
Well, I mean, I just think like it's hard to overlook the fact that like there are projects out there that have no product, and just a token and are trading out multiple billions of dollars.
Yeah, I mean, look at this. This is Dove Metrics. Here.
Yeah, there we go.
This is all the funding recently.
Mm-hmm.
This is seed round, seed round, seed round, seed round, Series A, seed, Series A. Right.
Yeah.
It's just all of it is list keeps going: seed, pre-Series A, seed, pre-seed, Series A, seed, Series A. And if you look at the types of companies, these are not really the infrastructure companies that kind of make money out of the gate. It's gaming, right? Yield farming, gaming. The trading liquidity usually gets cash flow positive pretty quickly, but gaming, privacy, gaming, metaverse, lending, borrowing. So,
yeah, I mean, I think there's, I want to say like, there's this idea of like how do you value this ecosystem? Like there's circulating supply and there's fully diluted supply. And so, I tend to focus on both. A lot of these startups have like token emissions that, if you look at fully diluted, can be pretty wild. But, I think what I'm trying to say is there are pockets that I believe in crypto today that are very overlooked and underappreciated. Because narratives change and sentiment and the market pendulum swings to extremes. And there are others that are just, in my opinion, just too crowded, and people miss a certain trade or miss a certain opportunity, and then they pile into everything that they can and really, really push that narrative to the point where it's just things are priced to uber perfection.
Yeah, I mean, give us the goods. Like, what are the areas of the space that you're kind of excited by and looking at right now, and from a more undervalued perspective?
Yeah, I mean, I'll say, which is an unfair statement, but I do think that like there are certain teams in gaming that are very sensible, raising at very sensible valuations, that come from Web 2 world, that are built like this is like ex-King developers. This is like the developer of Candy Crush, and they're raising at like 20 million fully. And in my mind, human capital, and you're probably in the money there. And so I look at that, and then I juxtapose that with like this random game. These guys have no experience building a game, and then just slap a token on it, and like it's trading at like a couple $100 million, and you're like, well, I just don't understand that. And so I like obviously to focus on the first one, which is I think there are very good builders coming into the space. And as an anecdote, I mean, Axie's really just proved how big this market can be, because it's not necessarily a very intuitive game. It's not the easiest to play. It doesn't have the best economy. There's certain things that are quite fragile. But look, I love what they've done, because they've really proved how big this market can be as a category: play to earn, play and earn, and Web3 gaming. And now imagine a super immersive game, or different kinds of games.
The big trend, I think, in gaming that will play out maybe in 12 to 18 months from now, I don't really know anything, but like what I think could happen is the games will end up launching their own banks. And you'll basically I think that's where the composable nature of crypto comes into play, right? Like it's so easy for Axie to basically slap a bunch of DeFi protocols inside of the game to make it so that like if you own Axie tokens, you can just stake them inside of Axie. So now that like you don't, let's say you're in the Philippines and like you play Axie a bunch, you actually don't ever need a bank account, nor do you need to hold your wealth in this like actually pretty volatile thing called Axie, right? You can now move it into stable coins. You can get 6% APY, things like that. So I think that's the big trend that's happening, that will end up happening.
Absolutely. I mean, for the first time ever, crypto is relatable to people, and it's fun. And you have, I think, three things. One is programmable money. You have obviously like culture and the social component and gamification. You combine all the three, and you have this powerful, explosive combination of people come here thinking that they're going to play a game, and all of a sudden they start creating a bank account and start saving, and they might not even know what's going on in the back end, which is, I think, a hallmark of the best technology. You don't care how it works. It just provides like this sort of 10x plus improvement. And I think like younger generations understand this. The analogy that I like to use is WeChat, right? WeChat in China, if you ever use WeChat started as a social platform, and then it's so pervasive, people started using it. And now it does everything for you, from ordering food, your car, streaming, your bank account, you read the news there. Pretty much everything surrounds around WeChat and this behemoth of an organization. So I think like ultimately a game or an NFT community like Bored Apes or something like that is going to realize that and start building all these ancillary services, or not building, just really integrating, as you said, in this very composable, interoperable world we call Web3. And I think that's really the promise here. That's where like probably DeFi really takes off again, where a lot of these games start using these DeFi protocols on the back end. What's super exciting about this space, you talk about cycles, is there's already been a tremendous amount of work on the L1 front, on the L2 front to support more users, and also on a lot of these services that are not really sexy. I mean, DeFi is really not sexy. I mean, people don't really like to think about their bank accounts and doing this stuff. But it works. And it will increasingly work and service a lot of these gamers and people that are being onboarded into guilds. And so I think that's what's really exciting.
Yeah. All right, man. Let's start to wrap this up. I think that's kind of all the big crypto news for the week. But there's definitely not going to let you off this easy. There's one other thing I wanted to chat with you about, which is nuclear energy, this is the part of the podcast where maybe we get a little weird and where people hang up on us and we just talk to each other. But I saw you tweet out areas I've been looking into that are underfunded and asymmetric. Microbiome sequencing, alternate forms of education, and some areas of crypto. But the number one was nuclear energy, specifically small reactors. A day later, I saw you send out a tweet, nuclear energy being taboo baffles me when it's most clearly the answer to our energy needs.
Yeah.
Nuclear is one of the most promising yet misunderstood technologies, a case study of how tech can be vilified at our own expense. What in the world are you reading? What are you listening to? Where is all this coming from?
I have an unpublished blog post, really long blog post, where I went super deep into nuclear. And it was just really hard for me to understand, like, why is this not like the most pervasive form of energy across the world? Because, okay, I understand nuclear waste, but I'll say this. Nuclear as a category has been grossly underfunded. Why? Because it's so, it's very controversial. You can't get a grant. It's been totally overlooked. And so we're relying on technology that has been quite antiquated. The amount of funding that's gone in this space is laughable. And I just wonder, like, if we actually dedicate resources, heck, create even a DAO to fund this stuff and academics that are at the forefront, then how powerful could this be? Because obviously the most exciting technology is people tend to think of these nuclear reactors as like massive structures, right? That look like, like these sort of like, it's kind of scary, right? You look
Chernobyl
at
bubbling
series,
over.
Right, yeah, that's what I'm saying. But when you look at all this stuff, there are like nuclear reactors. There's a great Netflix documentary. We'll drop it in the notes. That is like goes into some of these universities and in France, some of these places. Like there are nuclear reactors the size of like your room that can power like entire universities and clusters of cities and stuff like that. And so I think to me that's really exciting. And I don't know. Like, again, it goes back to my intro. Like I've always just when I look at something like that, it's sort of like there's a lot of friction in the world in terms of, you would think that information would flow really easily in the uber connected world that we are in today, but somehow certain things like crypto and nuclear have become taboo and have like these really, long-standing biases. For a long time, people still think crypto is like drug money and Silk Road money. And it just sort of reminds me of how quickly people have this knee-jerk reactions to stuff. And I think for nuclear, it's definitely generational, right? I mean, people grew up in the Soviet era. It's so hard to not be totally afraid about this technology because you think about the Cuban Missile Crisis and you think about 3 Mile Island. But yeah, I know I've spent more time than I care to admit. And I'm not a nuclear engineer by training. But if there's anyone out there listening, would love to talk to them because it is an area that I'm actively looking to invest. Because I think it has, again, it's asymmetric. Crypto is asymmetric. I still believe it. I don't think you missed the boat on anything. None of this financial advice. But I think nuclear is in that same category. And it's crazy.
Yeah. It reminds me, did you see Sam Altman just made a massive investment? I think it was like $500 million in Helion.
Yeah.
No, it just reminds me, like, there's this New York power plant called Indian Point Power Plant. It's about 25 miles north of New York City. It provided 25% of the city's power. 25% of all of New York City's power came from this one power plant. And Cuomo basically railed against the dangers of having this nuclear power plant operating, so close to the city. And I remember, like, on his press conferences, he would always say that, its proximity to such a densely populated metropolis defied basic sanity. And basically, he got a political win. They shut down the plant. And what ended up happening is it basically, now where we get that energy is from these fossil fuel dependent plants, which basically all of the folks in Cuomo's office, before he was gone, obviously, they're saying, oh shit, we didn't actually mean to increase fossil fuel usage. So
yeah, the last thing to say is it's sort of an interesting tidbit, I think, which is people talk about renewables like wind. I think it costs more energy to create a wind turbine, and cost, especially energy expended, than what it will produce in its entire lifetime. And so, like, again, narratives, right? People, oh, it's wind, it's solar. It's like, okay, solar has done huge leaps in solar tech, but still, nuclear, in my opinion, my humble opinion, as a non-trained, engineer, is that it is by far the most efficient type of energy source today. And
one of the smartest guys I've ever had on the show is this guy, Christian Angermeyer. He started a bunch of psychedelics companies that are now public, made a couple billion many times over, really amazing German entrepreneur. And he's just like a real pioneer in both crypto, but also psychedelics. And I asked him what the most interesting thing that he's looking at is, and he said nuclear. So
let's get him on.
Anyways, Santiago, this has been an awesome show, my friend. I'm so excited to have you as a co-host. This is gonna be great. This airs Friday morning. And for anyone listening, like, honestly, just let us know what you think of it. Let us know, like, just give us feedback. Let us know if you like the sections. Let us know if you like us talking about tweets, news, want to dive deeper into Santiago's brain and talk more about nuclear. Just let us know what you think, guys.
Oh boy. No, thanks, Stacey. I'm super excited. For a long time, I've been wanting to start a podcast, and I'm so happy to be here. And hopefully our listeners have enjoyed this, and definitely let us know if there's stuff that we should be talking about. And maybe we could throw out a tweet and say, things that people want us to talk more about, and we can make a point to do that at the end of each episode.
Let's do it. Yeah, we'll do it Friday morning. So, all right, Santiago, be well, my friend, and I will talk to you soon.
Thank you. You as well.
All right.
Take care.